Hello and welcome to Web3 Diaries. I'm your host, Roshni Shingre.
Hello, I'm your host, Shikha Singh, giving you a daily dose of news snippets on the Web3 universe.
Hello, I'm your host, Vishakha Thakur. Let's start with the news for today. Indian investors can finally get some clarity on their tax liability for trading in virtual digital assets, or popularly known as cryptocurrencies. Zebpay, India's oldest crypto exchange, has partnered with Taxnodes, an expert-assisted ITR filing platform, to simplify tax filing for virtual digital assets in India. As a result of this association, Taxnodes will provide assistance to Zebpay's extensive user community to ensure precise tax calculations and compliance to keep them updated with the most recent tax-related developments in the virtual digital asset industry. It may be remembered that in 2022, the Indian government implemented a tax on investments in virtual digital assets, whereby any income gained from the transfer of such assets is subject to a 30% tax and 1% TDS. The complexity of new tax laws has led to considerable confusion among Indian retail investors and traders in India. Hence, it is necessary to establish appropriate compliant infrastructure and enhance investor knowledge on how to file taxes correctly. This partnership, Taxnodes, intends to enable Zebpay users to calculate, evaluate, and file their crypto taxes, alleviate misapprehensions, and reduce the possibility of tax miscalculation. In addition to this, Taxnodes' end-to-end solutions will help users get the much-needed clarity on the taxes on their investment, thereby simplifying the taxation journey of every crypto investor in the country. With the emergence of crypto taxation infrastructure, experts believe that India is poised to become a key player in the global crypto market. It is likely that the partnership between Zebpay and Taxnodes will help promote awareness about current and evolving regulations governing virtual digital assets. Apart from getting expert assistance on tax filing, Zebpay users will also receive personalized advisory services by Taxnodes, enabling them to better understand the tax implications of their digital asset investments. In addition, Zebpay users will be able to take advantage of discounted services through an exclusive offer. Over to you, Roshni.
Jane Street Group and Jump Crypto, two of the world's top market-making firms, are pulling back from trading digital assets in the US as regulators crack down in the industry. Jane Street is going even further by scaling back its crypto ambitions globally because regulatory uncertainty has made it difficult for the firm to operate the business in a way that meets internal standards, according to the person familiar with the matter. Jump Crypto, the digital asset unit of Jump Trading, is pulling back from the US market for the same reason, though it's expanding internationally, two people familiar with the matter said. Both firms are still making markets, though on a smaller scale, and not abandoning crypto entirely, the people said. Scrutiny of the digital asset industry has intensified following the collapse of high-profile firms and projects, including FTX and the crypto exchange founded by Sam Bankman-Fried and Terra USD stablecoin. Disgraced former FTX CEO Sam Bankman-Fried worked at Jane Street before entering the crypto industry and was known to hire former Jane Street employees as executives and employees, including former FTX US President Brett Harrison. Jane Street and Jump Trading were caught up in some of the turmoil and were among trading firms questioned by US prosecutors in a probe of the failed Terra USD stablecoin project. Jump Crypto had been a major backers of the Terra USD project since 2019. No one has been accused of wrongdoing, and inquiries don't necessarily mean that charges will be brought. The trading firms are not alone in making changes to their crypto operations in recent months. A spate of crypto probes in the US has prompted companies to look towards financial hubs overseas, including Dubai, Singapore, and Hong Kong. Coinbase is considering setting up an international hub in the United Arab Emirates. Galaxy Digital is moving more of its operations offshore, CEO Michael Novogratz had said. Over to you, Shikha.
Bitcoin fees have hit a 2-year high and they are continuing to climb fast. Data from Bitfino charts shows that the current average price to make a transaction on the Bitcoin network stands at $31.14. The last time it was that high was back in April 2021 after it touched an all-time high of nearly $63, then dropped down again. Some even highlighted on Twitter how surging fees are hurting those using Bitcoin for everyday transactions. A $100 transaction in El Salvador cost over $20 to complete, where the average salary is $300 to $350. Why are they so high right now? If you want to make a transaction on Bitcoin blockchain, you need to get it approved by a miner. If the network is busy, you'll have to pay more to get the job done. That's the transaction fee. And it looks like a lot of people are using the Bitcoin network right now. Some have said that the current clogged network is down to the surge in interest in ordinals, a protocol used for minting NFT-like assets on Bitcoin. When making a Bitcoin payment, you have an option of paying lower fees, though by doing so, you risk waiting around for hours as miners prioritize more lucrative transactions. That's it in today's special segment. For more such updates, keep following Switch.tv. Do not forget to like, share, and subscribe to our YouTube channel. Do press the bell icon for more such updates. Thank you.